Okay, welcome everyone. Let's get into it. Stock market technical analysis. We're going to look at what the charts are pointing out today. We got big earnings coming after the bell. So Amazon and Apple reporting. And as far as I can see, the market is basically, it's kind of do or die time for the market. So Apple, these earnings after the bell are essentially going to save the market, or they're going to allow it to kind of crash basically a little bit, maybe a 5-10% drop pretty quickly. And that's the way I'm leaning right now. I'm going to point out what I'm seeing in the charts, guys. Drop me a thumbs up if you guys are finding value in the content. Leave a comment, or if you guys have a stock you want me to look at, leave a comment, and I'll kind of scan through the things. Also, I do a live stream on Saturday mornings around 9:15, 9:30 Pacific time. So if you're interested to join those live stream, you can ask me questions. I throw charts up that you want me to look at, and I spend about an hour on average on Saturday going through that. And then finally, guys, quick update. I am increasing the price of my stock market technical analysis course. That course is put together for my subscribers at the request of my subscribers. It's about 4 to 5 hours of video training going through all the different concepts that I really try to pinpoint for success. And then also I give you guys a checklist on kind of things you want to look for when taking a trade. All right, that link is in the description below. Again, the price is going up. It's priced at $99 right now. I'm raising it to $150 at the end of the week. So if you're interested in that, get it while you can. Otherwise, don't worry about it. Okay, moving into the charts, triple Qs. All right, we're likely not going anywhere today, just with the Apple and Amazon, big tech. They're going to move the market. They're going to move this triple Q. So, who knows how they're going to report. Most likely, Apple has so much cash, they can pretty much just engineer a good earnings per share report. So they can pretty much just buy back enough shares to where their earnings per share looks good. All right. But again, at the same time, they might want to, if they see bad growth in the future, they might want to use this as an opportunity to revise downward, and the market that's probably what the market's going to trade on if that happens. So they're likely going to beat earnings per share, and maybe they'll revise downward. I don't know. But technically, we're right here at this key level, and it's about 318. We've been trading here for the last few days, and ultimately, this has been the battleground for pretty much the year. Kind of the final area of support. Back in February, we hit it. Back in March, we hit it, and we're there again right before these big earnings. Apple being the biggest company, so if there's a bad, if the market sells down Apple after hours, then it's likely going to take the market down with it. All right. So that's all I really see. Now, the one thing that I do want to point out that, gives me a little pause, I suppose, on when shorting the market, I do think we're going lower, but here's the thing. We've got bullish divergence right here. All right. So it's definitely a bullish setup. All right. We are basically at the lows here with bullish divergence on the daily chart. So it's clearly a bullish setup. All right. If you were a bull and you don't think we're going lower, then this is the great objective area to be going long at. Okay. That is hands down a very objective area to go long for, a bounce or a move to new highs. All right. So that is, the charts are telling me that that's likely going to happen. But the thing is that I'm seeing weakness across the board in a lot of different sectors. And I think what's going to happen is we're going to take out the divergences. I think if we do get that move lower, so if we do sell down to my next target, and kind of my final target for right now at least, is down here about 300 in the triple Qs, then we will take out the bullish divergence. And it will be just at that moment in time, it will be obvious to all that we have entered a bear market, or at least in tech for sure. We're already in a bear market right now. Any lower and we are in a bear market, and this is not just a corrective period. So who knows, it's likely going to play out pretty quickly. So you kind of have to just take a position. If you're long, you go long, and it's just kind of how it is. So that's what I see there in the in the charts. IWM starting to crack a little bit its support, but again, it's right before these big earnings. The support here is about 188, and we're down here at 185. I suspect they're going to rally it and probably going to close the day just in this area, not much lower from where we're at here. Again, IWM, we're making a new lower low right now, and we have bullish divergence. There it is on the RSI and the PPO. So that's indicating that, you know, this is a bullish setup, all right? For sure it is. It doesn't tell me that we're necessarily going to sell off down to my next target down here at 173, 170. It actually tells me that this divergent low has a high probability of being recovered, and we see a rally, all right? So that's it there. Again, you kind of have to take a position because they've basically stacked the market. They like to do this sometimes. They've stacked the market where it's right at a key critical level. We do have bullish setups, but it's right before big earnings, which have the potential to take out these divergences. So anybody's game at this point, and they're just sending us into these earnings with really nobody knowing what's going to happen. So Apple, and then we'll cover Amazon since they're both reporting. So Apple is, you know, just above the 200-day right now. They're likely going to close this thing right on the 200-day. It is in a slight downtrend. If you go to the hourly chart, you can see we're kind of making this downtrend here. We popped above it once, but it did fail. That's kind of a clue that, you know, that we did fail. And we're just within this trend. So bad earnings come out, and we're likely going to take out the big support. Here's the big support in Apple. All right, on the daily chart, this is going all the way back to September of 2020. You can see all the little circles I have here along this trend line is tags of this major support line, and we're above it here. If bad earnings come out, we're likely going to gap down below big support, somewhere down here. If you see that, it's very likely that it's very likely that it will hold, and we'll probably gap down and sell down, taking out this big support, and that would be a sell signal in Apple. You get the sell signal in Apple like this, you're probably going to get the sell. You're probably going to sell down pretty impulsively in the Qs and the other FANG stocks and the tech sector in general. So who knows what's going to happen, but if you do get that gap down below this trend line, to me, that's just an obvious sell signal, and they're going to run it lower. Amazon's already taken out its big trend line. So if I look at the weekly chart here, look at this. Here's your going back to 2008, 9-ish. You've got on the weekly, you got a support here, support here. So this is your big pattern, your big bull market for the last, decade or 12 years or whatever. We got a big sell signal, rejected. We clearly rejected it off of the tag of resistance. So each time we hit this trend line, we're now selling the rip. All right. So to me, that tells me that Amazon's going to come out with bad earnings, and it's actually going to continue the selling. We should, see more selling coming in Amazon. I don't see major support in Amazon till about 2050. Good support down there. All right. You can see support through here. So very good support down there. That's where I think we're going. And I suppose this earnings report will be the catalyst for that, for that next move lower. Amazon, but does have bullish divergence. There's the setup right there. See the bullish momentum in the RSI and the PPO. So we just made a basically a slightly lower low right here, but with bullish divergence. So I don't know. Maybe there's another rally in store all the way back up and test it again. Completely possible. That's what the chart tells me it's going to do. I'm kind of going against a little bit what the chart says. I just am seeing signs in the broader market that I think we're going to actually break down, and this is going to be a big trap. All right. These divergences are telling you, hey, here's where you want to buy. This is where it makes sense to buy. So if you're bullish, this is basically a good setup to go long. But if you see that gap down or that negative earnings, I just don't like the fact that this is playing out right before earnings, that they've got this setup right here looking so bullish, and then it's right before earnings. To me, that just seems like a trap that you're going to have it set up bullish to try to suck in some longs, And you're going to do that right before earnings come out. I don't know. So I'm going to remain short on this one. You see Facebook, they pop Facebook here after earnings. They're selling into it though. So, it was up, I think, almost 20%, and they're taking profit and selling into it. So just keep an eye on that. It just shows the pattern that we're seeing. We're seeing after hours rallies where we rally, and after hours thin volume is taking place, and then as soon as the market opens, they're just selling right into that with bigger volume. That's, to me, that's a sign of a bear market when you have these little thin after hours moves, sucks in all the retail traders. They see good, strong earnings. They see a move in the after hours. And then that gives the institutions the next day opportunity to sell big positions into that liquidity. All right. And if they're trying to exit positions, if you want to exit a Facebook position, do you want to do it when you're way down, or do you want to do it on an 18% gap up? Open up, lots of volume, you're up 18%, sell into that. All right, so that's what I'm seeing there. Let's take a look at oil here. So oil's just kind of chopping around. I think we're going to get a flush down. It's just not showing up yet. But DVN and CNQ are the two short trades that I'm in, and I do want to point something out that's kind of interesting here. So you'll see here that we're rising, kind of grinding around right here, rising over the last pretty much all week. And this is after this big sell down in DVN. So now we're rising. Looks exactly like a bear flag to me. So look at the declining volume right here on rising price. Moderately rising price with declining volume after a big sell down, bear flag. So it doesn't mean it has to play out, but it's a textbook bear flag. So what you want to do is you want to take the drop here, and you want to kind of go to the hourly chart to measure this out, and you want to draw your flag out. It's something like that. I don't need to be super accurate here, but I'm just trying to point it out. And then you want to take the original flagpole and just mark it from like the high right up in here. And so depending on when this breaks down, so let's say it breaks to the downside, then you just move that. Wherever it breaks down at is where you want your flagpole, your continuation flagpole to start at. I don't see it breaking down yet, so we'll just kind of leave it right there. And right now that's projecting us down to about $48. Going back to the daily, that would be close to my near-term target, or kind of a target right here at 45.50. We've got some support. You can see it was resistance through here, slight support through here, little gap right there. So I like that. And the 200-day, you can see it's rising. So if we continue the flag down, we might meet up with the 200-day, somewhere right in there, I think is going to be the target. Whether it hits the 200-day first, or maybe this horizontal support, either one I would say is the target. So looks like a good bear flag. So I'm looking for continued downside. Here's CNQ, same picture really. You've got the bear flag going on. You've got consolidation, minor consolidation. You've got declining volume. And yeah, it basically just sets us up for a continuation to the downside. This one's kind of this little sideways consolidation here like this, and basically we just take our flagpole, mark it out, we'll go back to the daily to do it, and maybe something like that. All right, so again, that's putting us down. We've got some horizontal support here at 54.75 it looks like, and then we've got this upward trend line. This is coming, this is pretty much coming off the March 2020 lows. Support through here, support, support, support. All right, and down there would be a tag of that trend line again. So I like any move, I'm just looking for that. Continue down to here, maybe it consolidates a little bit more, and probably a brief whip down to hit that trend line, and then a recovery. Anywhere in there would be good for probably a final target. You don't have to wait for the tag of the trend line. If we get down here at 54.75, it's probably good enough to take your profit there. Because again, from the sell signal, which was back here on April 22nd, even if you took it at the very end of the day, that's still a move of about 15% and a potential of about 20%. And I think that's about what we're going to get in oil, is a nice correction in oil. We'll probably hit this trend line and then continue the uptrend. Oil is in an uptrend, and yeah, that's what I see there. Gold, just not doing much. I think it's just going to continue to grind lower. Maybe we have a one-day whip, impulsive sell down. I'm still looking for that 1840-ish level in gold. I think we'll run down, hit that, and that should be the bottom in the near-term move for gold, and probably a bottom in the near-term move for the gold miners. The gold miners have some earnings coming out, so maybe that'll be the flush down. Who knows? We've already seen a really impulsive move down in some of the miners, especially the juniors and silver miners. But the majors are still, I think they got to come off a little bit more. But areas that look like good areas to buy, here's PAS. If you wanted to, you could step in here. I mean, it's close enough, but in general on the daily chart, you've got resistance all through here. Resistance. We finally broke out. You can see when we broke out, pretty impulsive. Came in for a back test, rallied. We're just coming in for another back test here. So I don't know if they're going to give us that perfect back test, because, a lot of people see this and they're probably wanting to buy. And, sometimes it doesn't give you that very perfect entry of a beautiful back test. But if you do see a brief little whip down to, this trend line, then to me that seems like an objective area. If you go to the hourly chart, you'll see on the momentum indicators here, we're building bullish divergence. See that? It's just continuing to build. All right, exactly what I thought I was going to do. The PPO and the RSI is moving higher. Look, bullish crossover right there, and moving higher while price is just kind of drifting lower. I suspect institutions are accumulating positions into this drift lower. All right, and I'm doing the same. I haven't started buying this one yet, but I did buy AG, and it looks pretty much the same. I'm just kind of waiting for one little dip down. I'm just hoping we get that. Yeah, that's what I see there. Okay, let's take a look at Netflix. Netflix has been sold off really strongly, so probably going to start to see a bounce opportunity coming soon. This is the hourly chart on Netflix, and I had this bearish falling wedge here like that, but I'm going to move it down like this. So I think this is it. And then as you zoom in, you can see here's the top of the wedge. I would wait for the top of the wedge to break. We should see some sort of an impulsive breakout like that to give you the buy signal. We do have bullish divergence on this hourly chart. You can see that's been building. So as we're drifting lower, the momentum is clearly going higher. So yeah, that's a bullish setup for sure. We need to see that buy signal, and whether we get it in intraday or if we get it in after hours, I don't exactly know. But until I see that buy signal, I'm just not interested. There's just, it's pretty high risk. The momentum is clearly to the downside right now in terms of price, but obviously these indicators are giving us a sign that maybe we'll see a bounce here pretty soon. What I would look for is, I don't know if we're going to get gap fill. Gap fill is all the way up here. Big move. That's at 329.40. That there is potential there. But at least probably gap entry, which would be about 248.66. We could see that, a move all the way there. If I go to the weekly chart, you can see we had some support right in here at, these areas. So right there, about 254 on the weekly chart. So we could see a move up there on a bounce. I think that's likely, but I don't have the trigger. I don't have the entry, the buy signal yet. So again, just need to see a break of this bullish wedge. It's a bullish falling wedge. We need to see a bullish breakout to the upside to give us that buy signal. And then the trade might be all the way up here to that 250 area. And from where we're at now, that would be a move. Let's see if we broke. You might get about a 27-30% gain right there in Netflix. So nice trade if we can get it, but yeah, just got to wait for it. Okay, that's all I see so for right now. We're probably just going to chop around. So good luck, everyone. Again, it's kind of mixed in terms of where it could go. I don't know. So I'm anticipating we're going to break down, but obviously the charts are set up a little bit differently. So that's what I got for today. You guys let me know what you think. Drop me a thumbs up. Check out the course, and I'll catch you guys on the next video.